stock market. Oh, man. Woo!
Welcome back to Strongman Personal Finance, everybody. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And I am sponsored by Sprytack.com. Check out Sprytack.com if you want a pair of delicious, superstitious cargo pants for any outdoor activity. Coupon code VTMyET in the description of the video. And you get 10% off 3 items and free shipping and free returns. Sprytack.com. Holy smokers! Now, ladies and gentlemen, I'm going to tell you about a stock that I just put $100,000 into, okay? Sleep Number? That's right. What's Sleep Number? Well, let's go look at their website, and then we'll go look at the financials, okay? And no, I actually didn't put $100,000 in this stock. As a matter of fact, I put in $0, and I'm going to show you why in a second. So here's sleepnumber.com, okay? They make mattresses. You can adjust your bed, you can change the settings of your bed. It's really cool, okay? They have bedding, sheets, pillowcases, mattresses, pillows, furniture, and I guess they do some sleep science. So if you want to learn all the details of exactly how this company functions, you can go somewhere else. But in this video, I'm going to go over the financials, a very brief overview of the financials. And I'm going to show you something that scares the crap out of me about this company, okay? You got to actually look at the financials, okay? You can't just be like, oh, it's the future, bro. So here we have Sleep Number Corporation, currently trading at $41.51. And it's got a PE ratio of 10. That's good, right? Low PE. Forward PE of 17. That's interesting. And the analysts, the genius analysts, they sell. Now, the beta represents the stock's volatility relative to the market. So you can see it's almost double the volatility of the market. The market goes up 1%, Sleep Number probably goes up 2%. The market goes down 1%, Sleep Number probably goes down 2%. That's beta, okay? We can look at the price performance of Sleep Number. So before the pandemic, I don't even count the pandemic because it's just ridiculous. But you can see the stock was trading at around 40 in the mid to high 40s. And then, of course, it crashed because the pandemic. Oh, my God, the world's going to end. And then we had this massive clown rally where it went up to $143. Why? Well, I have a suspicion that a lot of people got stimmy checks and child tax credits like me, and they went ahead and bought premium beds like Sleep Number with that money. And funny enough, me and my wife, when we got our first stimmy checks, I think the first stimmy check was $1,200. We went ahead and bought a bed. So that's probably a big reason the stock went up. And I did not buy a Sleep Number because I'm not that spendy. It's too complex. You got freaking controls to move the bed. I'm good. Now let's go look at the financials. Okay, brief overview. We can see revenue has been going up pretty freaking consistently year over year. 10%, 6%, 10%, 9%, 17% in 2021. Holy freaking smoke us. Gross profit, kind of all over the place. But net income is also going up. Profit. This is a profitable company that's been growing net income pretty significantly, okay? And they are doing massive share buybacks. So you look at this and you're like, wow, look at that. Massive revenue growth. I mean, pretty decent at least. They're profitable. They're buying back shares hand over freaking fist. And their earnings per share is skyrocketing because they're growing their earnings and they're buying back shares. And they're actually constructively retiring them. They're not parking them in treasury stock. And I'll show you how I know that because it confused me at the beginning, but they're actually retiring those shares. So they're not sitting there just waiting to be reissued or, be reissued. They're actually completely retired. And the profit margin has gone up. So One thing that is a little worrying, looking at the profit margin, is it was in the low to mid fours before the pandemic. And then they had this massive skyrocket of profit margin. This will probably revert back to the mean. Okay. You can do more research on it, but generally something before the pandemic where it has pretty consistent profit margins and then it spikes up during the pandemic. That's a little interesting right there. Okay. Now, here's where the problem with Sleep Number comes in and why I would not touch this stock with a 10-foot pole. Let's look at the cash and cash equivalents. So I'm looking at the quarterly, and you can see cash is actually extremely low, extremely freaking low. The most recent quarterly report, they only had $2 million of cash on the balance sheet. Okay. Their total current assets are $221 million. That consists of a little bit of receivables, a lot of inventory, and other current assets. So their quick ratio, which is a more stringent measure of current assets versus current liabilities, is insanely freaking low. Okay. We go down to their total assets, and their total assets have barely increased over the last couple of quarters. And we look at the annual, they've actually had a big part of their current assets or their total assets actually increased starting in 2019. Now, here's where the really scary thing is, okay? The current ratio measures your liquidity. It compares your current assets, stuff that you can convert to cash or stuff you can convert to cash within a year versus your current liabilities, bills that are due within a year. You generally want that above 1. You want it above 1 because generally when you look at a company, you want to make sure that they can pay their short-term debts, okay? Because if they don't, they're going to have to issue more debts or dilute. So you look at the total current assets here, $207 million. And the vast majority of that is inventory, which is a little more illiquid. You compare that to their current total liabilities, $906 million. So they have $2 million of cash on the balance sheet, and it's been pretty consistent. And they have debts due within a year of $906 million. And you can see a big part of that is current debt. Now, deferred revenue is cash you've received in advance before you've performed a service or delivered an item. So I don't stress about deferred revenue too much unless you think this company is going to have a ton of cancellations. You'd have to look into their cancellations policy. But you can see an insanely worrying amount of current debt. And it's been going up and up and up and up and up. So they have all this debt maturing within a year, $454 million. And they basically have $2 million of cash on the balance sheet. Now, the question is, why? Well, it's because they're buying back basically every spare cent of cash they have. They're buying back shares. And it's a really dangerous situation because if something happens that, really affects their cash flow or their cash conversion cycle, they may have to slow down or cancel buying shares back. So you need to be extremely careful. They're walking a very fine tightrope here. Okay. And look at the cash growth. It's just every year, negative, 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 negative. Now, if we go to the statement of cash flows, we can see that they have positive operating cash flow. That's a good thing. What do they spend that positive operating cash flow on? Well, they have a little bit of capital expenditures. That's less than the operating cash flow. So they have some free cash flow. And we can see basically every freaking dime is going towards share issuance. Or share repurchases, excuse me. And we can see the share repurchases almost match their operating cash flow. Now, what is making up for the difference? Okay. Because some years they may not have enough free cash flow to buy back shares. Oh, look at the debt issued. They're basically almost issuing debt, going into debt, taking loans to buy back stock. And what kind of environment are we in? We're in an environment where interest rates are going up. Okay. So let's go back and look at their retained earnings. So your retained earnings is your accumulated profit and loss. What you do is you add up all the profits and losses going back since the founding of your company. And that cumulative sum adds up to your positive or negative retained earnings. If you have a negative retained earnings balance, your accumulated profits, you've had accumulated losses over the life of your company. However, there is another thing that can impact retained earnings. Well, there's two ones. First of all, you can issue a dividend. If you issue a dividend, you actually debit, you reduce your retained earnings. And it makes sense because if you think about it, a company makes a profit. That profit gets closed into retained earnings. Retained earnings has been retained in the company. And then if a company pays a dividend, those profits leave the company. And that reduces your retained earnings, your retained profits. Now, you can see they're not really paying a dividend. Let's go back and look. I didn't really see any dividends. I see share repurchases. I don't see dividends on here unless they excluded it from this, okay website that's free. But their retained earnings keeps going down and down and down and down. Why is that? Simply put, they are buying back shares for more than they initially issued them at. They are constructively retiring their shares. Those shares are basically gone and they're counted as not even issued. What happens is if you buy back shares for more than you initially issued them at and you constructively retire the shares, you actually have to do a plug and debit your retained earnings. Because what happens is a company cannot recognize gains and losses from buying and selling back their shares. And that makes sense. I mean, like, why would you want a company buying and selling their shares and generating gains and losses? It's stupid. So what happens is they usually plug different equity accounts or retained earnings in there to account for a company buying back its shares. So you can see, and I was looking at the retained earnings. I was like, why is they're profitable? Why is the retained earnings going down? That's so freaking weird. They're not paying a dividend. It's because they're retiring their shares and they're buying them back for more than they initially issued them out. So hopefully, the cash they initially got, they actually use that to get, a high rate of return, because what they're doing, according to accounting, is they're buying back shares for more than they issued them at. And that's reducing their retained earnings. And you can see their shareholders' equity is going down and down and down. So basically, it's almost like, your ownership portion of the business has been gone, has been destroyed. It's terrifying because you look at the total liabilities, their total debts exceed their total assets. So at the end of the day, I'm sure they've been doing this for a long time. They've been playing this game for a long time where they keep barely any cash on the balance sheet. But the risk is if something happens with their cash conversion cycle, how long it takes them to convert cash from, collecting receivables, selling inventory, and paying off their debts, their short-term debts, their payables. If something happens to that cash conversion cycle, and you can't really predict what could potentially happen, they might have some serious cash flow issues. I mean, look at this. Their total current assets are a fraction of their total current liabilities. So there's a very dangerous game going on here. And I don't like the concept of a company playing a game like this where they're basically issuing tons of debt. They're going into debt to buy back shares. It's basically what they're doing. So, the revenue growth is great. Revenue's up, and they have positive operating cash flow. And it's actually, look at that. Look at their positive operating cash flow. It's been going, it's kind of not that great recently. So just because of that, I'm staying away from this company. Okay. You can do whatever analysis you want, but a company that's buying back shares for more than they issued them at massive proportions, and they're taking out a lot of short-term debt to help finance those share repurchases, not my freaking thing. Okay. But maybe you can 10x from this stock. We'll see. I wonder who this is referencing. I heard about Sleep Number. I wanted to look into it. Okay. Let's see the whitey. I don't wear whitey tighties. Is the reconsidered financial advice. Whenever I go, that means you buy Tesla. Okay. I thought this was before the recession. It has now dropped another 50%. I mean, it's been freaking wrecked. And obviously it was going to get wrecked. Okay. It was the whole pandemic was obvious to me that there were so many clown stocks out there because we printed a bunch of money. We gave people child tax credits, generous unemployment benefits. stimulus checks, and a lot of these companies temporarily benefited, but that's not going to last forever, of course. I got $5,000 back on my taxes because of my son. I mean, that's ridiculous, you know? That ain't going to happen next year or this year, sadly. But this game they're playing, I don't like it. I got to learn how to read financial statements. I thought the beta represented me, Kevin. Paul said this was a 3x stock. I mean, if they can keep playing this game forever, where they keep increasing their debts and they keep using, part of their free cash flow and part of the debt to buy back these shares. I mean, if they keep playing this game, maybe they can, do okay. But at the end of the day, you're gonna own a company with not a lot of shares, but with a lot of freaking debt and not many current assets to pay it off. That's what I see with this company. Let's see. Are they issuing debt to buy back? It looks like they partially are. That's what it looks like. And you can see the retained earnings is going down. And it actually confused me. I was like, they're profitable. Why is there retained earnings and they're not paying a dividend? They're actually constructively retiring the shares. And whenever you see retained earnings go down because of share repurchases, that means they're paying more for the shares to buy them back than they initially collected in cash to issue them. That's what it means. I had to refresh my accounting a little bit. Beds. Boring. Hi, strong man. Hi, weak man. Sorry, weak man, personal finance. Glad to see you. I'm doing great. Snowflake. Was that a liberal stock? You should consider politics. I will never be a politician. Ever. How did Paul decide this was a good investment? Well, if you kind of ignore the balance sheet, everything else looks good. I mean, revenue growth, and they're profitable, and they're they're buying back shares in like an insane amount of shares. Okay. And funny enough, I hope they weren't buying back too many shares during 2021. Let's actually go look, because the stock price went nuts. Okay, so during 2020, and so basically in 2020, the stock price had a massive run up. And let's see how many shares they bought back in 2020. They spent $226 million buying back shares that were massively, massively overvalued. I mean, how can you say that's not over? I mean, just look at that. Look at that. Come on. That's just like a common sense thing. This is obviously overvalued. I don't even have to do any analysis to see something like this. Oh, it's in the 40s and now it's $140 stock. Unless they did like a reverse stock split. I don't freaking know, but that's obviously massively overvalued to me. So I'm staying away from that garbage. Where is Scott? I don't know. He's probably making an Ari video. Ari, please respond to me. Oh, maybe we can have an interview, and then we can fall in love, and maybe you can spank my monkey for me. A father will down at the docks and sleep on sleep number mattresses. I heard Mike Stathis' sleep number has a lot of Oh, God. I don't even want to think about that. I think Paul invested in this because he saw the shares buyback without looking how they achieved that. I mean, I don't know. That cash balance is terrifying. I mean, but they've been playing the game for a while, so they've been making it work. I mean, maybe they have good cash conversion cycle. Jeremy's really going to show you how to invest. You'll see when he gets out of jail who was right. It's like there's no company to buy out there. I thought this was a guarantee. Well, nothing is guaranteed, man. That's why I buy the market. I don't play those games. They also bought shares and they're really expensive, and now they are cheaper. They don't have money to continue. Yeah, they bought shares in 2020 during that run-up. How are analysts on tip breaks so long? Aren't they supposed to be professionals? Well, they focus on the short term. And I'm a long-term investor, so I just buy the world and a little bit of individual stocks and let it sort itself out. Paul said to call investor relations about the current liabilities. I mean, I don't have to call them. They're borrowing lots of money to buy shares. That's basically it. Sleep Number. I don't know this company, but they seem to have overpaid for their share buyback. Many companies. Yeah, that was stupid. They should have halted that and they should have used that opportunity to strengthen their cash position. FE is doing a lot of product checks at Sleep Number now that he's homeless from all the tattooed chef. I hope Jeremy buys this freaking stock. Everybody's got to sleep, right? Look at the revenue growth, bro. Alibaba to the moon. You're a stock genius. I hope, even if it does it temporarily, I hope there's some kind of, I don't even know if it's heavily shorted. Don't think it is. I hope it has a massive run up just so I can talk trash. I just want to talk trash. That's it. Maybe I'll cash out at like 250. Like, hey, I made money. Losers. Sleep Number fell 95%, and this was a company that's awful if the economy starts to turn. I mean, it's a very premium product. Very premium. I mean, even when I had a stimulus check, I wasn't gonna buy a Sleep Number bed. Strong man, legit thanking you for fixing my financial advice. Before you, I was stupid. Well, you should really thank the Bogleheads and Jack Bogle. Okay, it's not hard to build wealth. You just raise your income, reduce your expenses, max your tax advantage accounts, and don't listen to clowns on YouTube, and you'll be fine. I mean, I've saved a lot of freaking money, and I didn't even buy individual stocks until 2020. But it's a great long-term hold, bro. Maybe. Dell. I should look into Dell. Prediction on Tattooed Chef. I don't predict Tattooed Chef. They're in a very dangerous situation where their cash balance has decreased massively. Like every single quarter, you see the cash going away. So I'm curious to see what they're going to do. They're going to draw on debt or if they're going to issue shares. But they're in a very precarious situation. If inflation keeps up, they're in serious trouble. Alibaba to the moon, just a question of time. I hope so. Jeremy told everybody to buy every dip in sight. See, here's the thing with buying the dip, okay? If you're dollar cost average, you're not buying the dip. You're just consistently dollar cost averaging. I mean, buying the dip, and I might make a video about this. Buying the dip implies that you're sitting there with cash waiting to deploy it, which I guess if you're buying individual stocks, okay. But if you're just dollar cost averaging into an index fund, there's no buying the dip. It's just dollar cost averaging. Can you do a deep dive on Baba? Yes, I should probably do that. You spend 1/3 of your life in bed. My bed's really freaking comfortable, man. I got a king size bed. I got it from a local Virginia company. I'm trying to remember what it's called. Virginia Mattress Company or something like that. It's a nice, I freaking love my bed. I'm not paying $3,000 or whatever for one. It's better to stay away. Well, his channel keeps growing, so I surrender. What will Jeremy do if Tattooed Chef goes bankrupt? Oh, let me predict. He'll get more subscribers. He'll make more money on his courses. You know, he'll make more ad revenue. It doesn't matter. It doesn't matter. Scott Schaefer bought a Sleep Number for the meeting. He paid $6,000 for All In with Ari. He had to make a lot of dogs high. Oh, Ari, please notice me. Thoughts about making more live streams and charge for a company analysis. I mean, if you want me to look at the accounting of it, I can do that. But I'm not going to say, oh, this is where the stock's going to go. I would simply look at the accounting, the past historical records, and help somebody understand the accounting, what happened with the company. But I'm not playing that game where I'm going to tell you where the stock's going to go. Buying the dip of an overpriced company does not make sense unless from a trading view. Yeah. Dude, I got asked to produce a video of best practices regarding 401ks and withholdings. The first thing I did, stop living in the Loop in River North. Everybody got mad at me. Is that like an expensive area? I bought a 3-bedroom townhouse. Even if I make a fortune one day, I'm still living in this townhouse. If you want to invest in bed, Temper Sealy. I live in Stafford. Let me take you on a date. You do? You know my parents live there? I actually go up there a lot. That's interesting. Cool. Well, if you're ever up there, I don't know, hit me up. As long as you're not a freaking psycho. All right, guys, that's it. Maybe I'll do another video or two, but that's it for Sleep Number. Very dangerously low cash. Lots of debt. 3,500. Oh, my God. All right, guys, that's it. Don't forget to check out sprytack.com. Get yourself a nice pair of tactical cargo pants for any outdoor activity. And if you use a coupon code VTMyET, links in the description, you get 10% off 3 items. And you get free shipping. And you get free returns. Sprytack.com, ladies and gentlemen.